I am so excited to be here with you two and to be talking about the markets and investing 101. There's people here probably from Robinhood Snacks, and there are people here who are from Mrs. Dow Jones. And so I'm Haley. I'm Mrs. Dow Jones. I am a financial pop star. I make keeping up with the Dow Joneses as fun as keeping up with the Kardashians. And I absolutely love Robinhood Snacks. So for Economy Week on MDJ Stimulus, I knew that it was completely necessary to do a webinar with Jack and Nick to talk about investing. So Jack and Nick, take it away. Who are you? Give us the scoop.
Thank you, Haley. We host a podcast every day. We issue a email newsletter every day. We're expanding a little bit to video, but Robinhood Snacks is all about digestible financial news. Launched middle of last year at Robinhood, which is the digital fintech startup. But we actually go way back beyond that.
Mm-hmm. Way back. I actually met Jack. We were freshman year roommates like a decade ago at this point. Walked into the same dorm room. Jack had the same kind of protein shake as I did, and we had the same Seinfeld DVDs.
So you guys are just basically two white guys, and you were like, I see you, babe. You have maybe you're wearing a button-down matching J. Crew.
There may have been some LL Bean involved.
Yeah. LL Bean, you have the booties.
Extremely different backgrounds, though, Haley. Nick didn't know how to ride a bike until I taught him at college because he was born and raised in Manhattan.
Mm-hmm. Oh, okay, true.
I was raised by cows in southern Vermont.
I was teaching Jack to interact with the rest of humanity.
I love that. Well,
so anyway, Haley, we had 4 wonderful years of college. Then we were working in New York City in the financial industry, and we launched a daily email newsletter to try to demystify finance and deliver news in like a way that wasn't incredibly dense and felt like you had to block off an hour of your calendar to like dive into the Wall Street Journal every day.
And that startup was called Market Snacks. We scaled it from a daily newsletter into a daily podcast and video. And then that company was actually acquired by Robinhood, the stock trading app that Jack mentioned, just over a year ago. So we've now retransitioned, moved from the East Coast out to the West Coast, and now have Robinhood Snacks, Snacks Daily being our daily podcast.
And the key for like all of our content, Haley, as you know, but as some of the listeners may not, is that we try to make financial news entertaining and digestible. So we'll use analogies that make sense to our generation. For instance,
well, I'm Gen Z.
Oh,
so it doesn't count for me, but like maybe for like other people.
Full disclosure, Nick and I are straight up millennial, but we're doing our best to
You're like borderline boomers, but like we won't talk about it.
You round up at a certain point.
We round up. Yeah. Okay, well, we get it. So you make finance cool. I make finance cool. You make finance digestible, snacks. You are acquired by Robinhood. You're BFF. You live on the West Coast now. Now let's talk turkey, okay? Investing 101. That's what we want to hear about straight up out of the gate. How does a beginner get started? Like, what is the first thing that I got to do if I'm like, today's the day, I'm putting my money in the markets?
First of all, Haley, we got to get a little bit of legal out of the way.
Yes.
As you know, we can't give investment advice. We can't make recommendations to buy or sell. And anything we do in this epic Zoom webinar is not an offer or sale of a security. But what we can do, as Nick just mentioned, we can talk about some storytelling. We can go back to like our first investment. We can go back to the circumstances that made us feel we could invest for the first time.
No, that is
the variables.
I want to go down memory lane with you. Like I am not interested in any tips. Like obviously you already gave them to me before this started. But no, I want to know about like if you are in this webinar right now and you are in a situation where you feel like maybe you have enough money to start putting some in the market, like where would you begin? And, are there ways to practice? Like, what are the ways that what are the steps you can take?
Sure. Let me bring you way back to my first investment, and then maybe Nick can do something similar on his side. But I think it was 2013. I was like 2 years out of college. I'd finally not had a credit card balance going from month to month, which is like the worst kind of debt you can ever have. I'm sure you've told all of your listeners about this.
High interest rate debt we hate.
So I paid off all my credit card debt. I finally had like a little bit of money saved, and like, okay, bad debt has been paid down. Savings, I've got an emergency fund of a couple months. Now I finally felt comfortable that I could take some money, and like my 401k was in decent shape, and I finally invested in individual stock. So what I did was like, I only had like $500 for my first stock back in 2013, invested in Ford Motor Company for like the weirdest reason. I thought it was cool that Ford Motor Company was 40% controlled by the original Ford family. I basically thought a family business was like a cool stock I should invest in because they're thinking for the long term and they have like a legacy to worry about. That investment didn't work out well for me. I lost a couple $100, but the beautiful thing was I only lost a couple $100. It didn't kill me, you know?
Yeah. You got your feet wet. Well, I have to tell you, the first time that I bought stocks was when I was very little, obviously, like I was a young girl, and I didn't get to choose them. Like my dad took my money because he works on Wall Street, and he was like, okay, like you saved this money, probably like $600 in dollars, literally, I'm going to put it in the stock market. And so I was like, okay, Dad, like I would like you to buy Lay's stock because I like Lay's, Starbucks, because I got to have the post-school Frappuccino. And I thought that like I could walk into Starbucks and be like, yeah, I'm a shareholder. I will have extra whip. Like I truly thought that I had mad clout. So we all learned our lessons. But in terms of educating yourself at the beginning, were there like books that were really important to you, websites, and even now, what do you guys really rely on to keep your brains going?
Well, Jack and I were fortunate that we were both studying economics. We both ended up working on Wall Street. We both ended up getting MBAs. So we've kind of ended up immersing ourselves in like literally textbooks on a lot of things. So we were just fortunate to have that. However, what we found is that when it comes to just getting to understand the markets, even if you're like an econ major, or even if you have nothing to do with econ and you're a straight up like double English lit major, the bottom line is you could be following financial news, which is like a mini textbook every day. And if you're doing that once a week, twice a week, 3 days a week, over the course like a year, it's pretty similar as getting like an actual econ course or econ degree over a period of time. So we're big fans of saying, hey, if you weren't able to like jump into econ textbooks because that wasn't your thing in college, financial news is like education you can start immersing yourself in on a daily basis.
I'm also going to pull a Will Hunting here and pull out how do you like one of them apples? But you could replace our economics degrees, Nick, potentially with like one well-written book. One book I can recommend is a book, Random Walk Down Wall Street, which is by Burton McKeel. It was a gift given to me actually. And I haven't read through the whole thing because I did have an econ and finance textbook and like education academic background. But read through this ring, it'll kind of teach you the fundamentals of the financial markets in like 300 pages.
I recommend Warren Buffett's Ground Rules. It was like the first, I didn't study economics. I didn't go to school for finance or anything. And I totally get it. And the first book that I read that I'm still like, everyone, you need to read this, Warren Buffett's Ground Rules. Well, he's obviously my boyfriend, but so I have to support, but it really is the best book ever and teaches you everything about compound interest, which is bae when it comes to like having a portfolio.
Also, there are just like fun business books out there where you learn about strategy and then that strategy plays into the stocks you may be curious in. Like,
well, what kind of book are those? Like which
talking
one?
about like Bitter Brew, which is a book about the history of the Anheuser-Busch family and like Budweiser. And it talks about, you know, how they had to invest in certain things and this and that and didn't see things coming, like their acquisition 10 years ago. And when you start to understand the strategy behind these business stories, which involve, by the way, like sex, drugs, and murder, which is insane. When you get to see the whole kind of fun spectrum, that can help you make informed stock decisions, even though it's like seems kind of removed from that.
Nick,
you can like follow the heirs on Instagram and be like, ooh, it seems like they're like really off the wagon. Better sell.
I read Once Upon a Car, which was a great book about the automotive crisis and like the history of Ford and GM. And that definitely also inspired my Ford first stock purchase. So
you guys were always like, I feel like from college and everything, you had the fundamentals down and then you used reading and like education that you did sort of on your own to learn about like niche subjects within Wall Street that interest you, and like companies you might invest in.
For me, like the first stock investments, it starts with the 401k because
Yeah, you gotta max it out.
if your company matches it, Haley,
It's free money.
You're getting a 100% return.
I know,
So
it's crazy.
If you don't take that 100% match, then you need to take your money, invest in stocks, and double the price just to match what your company was offering.
100%.
After that, I kind of did mutual funds and ETFs, which we at Robinhood Snacks like to call like stock smoothies. We actually have a great article written in Robinhood's Learn section called
I like to call them on Mrs. Dow Jones eyeshadow palettes because like lots of different colors. But yeah, a lot of people say like after you max out your 401k, you got to do the ETFs and the mutual funds because they sort of give you a mix.
So my first ETF was like a broad S&P 500 ETF, where if you just buy this one thing, you get a little bit of all 500 biggest companies in the United States. And we like to think of that as like a well-balanced smoothie. You get a little bit of dates, you get a little bit of bananas, a little bit of strawberries, a little bit of protein powder. It's everything you need with one simple order. Plus, you know, there's a lot of benefits to diversification. And then after that, it's when individual stocks came into play. But that was sort of the third chapter of my stock investing maturity.
Amazing. Okay, well, that's super helpful. And then after that, did you open up a brokerage account and start picking individual stocks or?
Yeah.
Well, kind of like to even back up on that too, like Jack and I typically go through like a few different things. And Jack and I are fortunate that we can pitch ideas off of each other and share them like we often do. But a big thing is also just like whether or not you're even ready to make the investment. And for that, you got to like check off a few things. Like Jack and I typically have like this almost like a pilot checklist of things before you're ready. You know, like one of them is, first of all, do you actually have that cash to spend, like Jack mentioned earlier? The second one is like, do you have the risk tolerance right now? Because remember, when you're investing in something like equities, someone I just noticed in the Q&A just brought up Luckin Stock, which is a Chinese coffee company, the Starbucks of China. You know, we had both invested in that company and they were found to have accounting fraud a month ago. And the stock has plummeted. So you have to be comfortable with the idea that if you're investing, you could lose your entire investment. Like Jack and I thought we were investing in the Starbucks of China. Turns out we were investing in what ended up being nothing more than like a coffee cup.
Haley, we got Enron. And the thing is, Nick and I we held hands before we jumped into the Luckin Pond, and then we jumped in and took the plunge together. So we're suffering together.
Well, if it seems like it's too good to be true, it's usually too good to be true.
I had tried the coffee before. It was great coffee in China. Little did we know.
So, okay. So I feel like for investing 101, it's like, so you have to sort of get a feeling about the markets and educate yourself on the basics. The Warren Buffett Ground Rules is a great book to read. I have other suggestions on MDJ Reads on mrsdowjones.com if you're looking for like the tip of the iceberg. And then obviously you need to get your financial ducks in a row. You got to have a 5 to 6 month emergency fund, credit. You got to have debt totally paid off. You got to have a maxed out 401k, and I'm missing one: debt, emergency fund, 401k, whatever. So then you gotta cut down on your spending. So sort of make a budget, get a hold of your spending habits so you can put all that extra money into the stock market, hopefully. Yeah. And then after that, that's when you have to sort of make the decision, who am I as an investor? Am I really risky? You know, am I going to just be, Gordon Gekko or Wolf of Wall Street on the phone, buy, sell? Or am I more passive? Do I want to have a smoothie, like Jack said, and buy a mutual fund or an ETF? So I feel like that sort of catches us up to where we are now. And what I think is so awesome about being able to talk with you two, and what I really want to take advantage of, is your knowledge of individual stocks, because that's you guys are two of the best and you're so great at explaining it. And I don't want any specific tips. I just want to know the process of thinking that you go through when you are analyzing a company and deciding if you might want to invest.
Well, to go back to that pilot checklist we got going, if you've got, the cash that you just mentioned and you're comfortable with that, and then the risk, you're comfortable with the risk. and you've decided on what kind of an investor you are based on that risk, then you're getting into actually having an investment thesis. And this is where, honestly, this is kind of where the fun part happens, where you should really be engaging maybe your friends in it, having discussions, bouncing ideas, and recognizing that investing isn't just a one thing. It's something maybe you spend time kind of accumulating a thesis over. So Jack, you want to share some of how we've like in the past looked back and kind of generated a thesis together before we like came up with an investment?
Sure. We had a podcast the last week of March, which was trends. We looked at the trends that we already saw in business and markets, and we predicted which of these trends might be accelerated and like blow up even faster because of the COVID-19 economic shutdown that was happening.
Yeah.
Nick and I brainstormed with Rebecca, the third snacker on our team, and we came up with like 6 accelerated trends that we predicted would happen as a result of COVID-19. One of them was cord cutting. Like cord cutting is obviously a phenomenon that's been around for years. I cut the cord back in like 2013, I think. I actually use an
early
antenna.
adopter.
Mm-hmm.
I use an antenna.
Before there were cords, he was cutting them.
I get all the NFL I need with an antenna. It's crazy. Anyway, accelerated trend, cord cutting. So we predicted, okay, live sports isn't happening right now. 2 of my brothers still have cable for one reason, live sports. And like,
I only have cable for Bravo.
my wife wants cable for the Grammys and Oscars every year.
Yes. And award shows die. Yeah.
So now that all these live events aren't happening, we predicted, wow, people are at home. They want to watch things. Like cable is lame. They can't even watch their sports. This could be an accelerated trend. So we made a prediction at the end of March, and we thought who could benefit potentially if this prediction is true. Mm-hmm. Of course, Netflix could benefit if we're correct in that prediction. You know who wouldn't benefit? AT&T. Mm-hmm. They have direct TV business. They have cable. They have internet. They also have a whole bunch of TV channels that depend on cable. So like, let's rewind to that moment at the end of March. We had a prediction. We thought that cord cutting would accelerate with COVID-19. At that point, you start to think, what are the stocks that would benefit if this prediction is right? Maybe you go into Robinhood and you add these stocks to your watch list, like stocks I'm thinking about buying.
I love that. It's like a wish list.
Yeah, it's like a wish list.
Yeah.
And then at that point, like, let's say you thought about Netflix. You can maybe take a look at the stock price, think to yourself, is this idea that I've just come up with, is this novel, or is this like a well-known fact? Of course, Netflix is going to benefit from this. Because if everyone has already kind of made that assumption, then you're just realizing something that everyone already knows is true. But if it's truly like a hypothesis that you're not sure if it'll be right or wrong, then this is a risky opportunity for you. You could be right, in which case you might make a great investment, or you could be wrong, in which case you might lose some money. Both of those are a possibility. But this is what like kind of individual stock investing is all about. Coming up with a hypothesis that you feel good about. Maybe it's about video game industry because you play a lot of video games. Maybe it's about fashion because you're all on top of like the latest men's fashion. Maybe it's about Chipotle because you're a fast food like phenom. If you think that you like understand an industry well and you can make a prediction that things could go better for certain companies, that's when you have the opportunity to make a risk and potentially make a reward.
One thing go ahead, Haley.
Oh, no, continue, Nicholas.
I mean, this is kind of like the fun part of what we're doing when we mentioned like covering business news, and like every day we're putting out our business news on Snacks Daily in the podcast, is like we're looking for themes over the course of a period of time. So like 2 years ago, General Mills, the cereal company, bought a dog food company. And then Smucker's, the jam company, acquired a fancy pet food company. Mm-hmm. And you're starting to like see a theme there. Then Nestle started investing more in their pet food company. And this kind of fit with the theme we've heard of millennials not having kids and instead spending their money on, you know, their pets and pet pampering and pet humanization, and that being a theme. And if people are going to spend their money on pets, that means they're going to have to buy more pet things, more pet foods. Mm-hmm. So as we covered this in the news over the last 2 years, it's been really interesting to see how it plays out with the company's earnings reports. And that's a great way where you can compare, or you can actually confirm if your thesis is correct.
So I actually got a bunch of questions before this about earnings reports and, you know, where do you access them? How do you analyze them? You know, like, do you just dig in? Like, what's the vibe?
This is great. One thing you can do is, there are places that will summarize earnings reports if you don't want to like go into the weeds. And I got to plug our podcast, Snacks Daily.
That's why we like to turn those meaty earnings reports into a snack every day, because honestly, you could spend a lot of time going through there. And then there are the financial statements. They're not that fun, but there's some interesting nuggets really buried in each one.
So Spotify had 31% more paid subscribers last quarter, which is like, wow, that's really good. It was actually better than the year before, despite COVID-19. So the stock jumped. Full disclosure, I own Spotify stock, I should totally say here. But it's a challenge to jump into earnings reports without the context. So we definitely recommend, our newsletter, Robinhood Snacks, our podcast, just so that you start to understand the language, because we will.
That's like a good way to jump in. And then, like, as you were saying, if you have that niche interest in one of those sectors, then you can maybe challenge yourself once you feel like you have like a lay of the land to go through them. We were talking yesterday about Clorox stock. And I think it was you, Jack, who mentioned that you have a friend who thought that they were like on some hot tip 3 weeks into COVID, like we're in quarantine. They're like, Jack, have you heard about Clorox? And Jack's like, okay, that trend is over. Like, come on, we are on to the next. Yeah. So, like that's sort of interesting too. How do you know if you're investing in a trend before it's started, while it's starting, if it's over? Like, can we talk a little bit about PE ratio? Yeah. And about how to get the information that you need to do that calculation, because it is very formulaic.
Mm-hmm. Well, before even jumping into P, just to like look at what's happened with a stock lately. And one of the things we mentioned before is like not maybe making an impulsive buy, but taking the time to look at the decision. You can, if you just Google a stock, like let's say you could Google the letters GOOG and see what Google stock is doing. And when you do, you'll get the Google response, which then lets you actually look at the stock's like performance over the course of 1 year, 1 month, 3 weeks, 6 weeks, all the way back, all time. And when you do, you can see what its behavior has been. So for something like you just mentioned Clorox, mm-hmm. If you had looked at Clorox in that moment you and Jack were just chatting about, to see what it was doing, you probably would have seen that the stock has been up over the last month or so, which would be an indication that other people had the same idea and they'd kind of acted on it a little earlier. So an early quick thing you can do before you even jump into any analysis is just get an understanding of what the stock's been doing. Has it already jumped a lot lately? Because that may be a sign that other people were a little faster.
Yeah. Let's take Zoom, for instance.
Mm-hmm.
Nick, I think.
By the way, Zoom literally is raking it in, and like, I can't like Zoom.
Nick, I think video conferencing might be like a good investment.
Right. Yeah. I mean, there's some good indicators.
No kidding. Video conferencing is a good investment. If there's a chance that your buddy responds that way, it means like that's a well-known fact. And when it comes to investing, you want to make the prediction that's not a no-brainer. Of course, that's true. Because if it is a no-brainer, of course, that's true, then everyone already knows that, and the price of that stock is probably already high. Now, Haley, I love that you asked about PE ratio, because that's the best way to understand like the price of a stock. Sure, a stock may cost $28, but that's just the number of dollars it takes to get one share. And with fractional shares that you can buy these days, like the price of one stock really doesn't matter that much at all.
Because you're not going to go all in.
You can spend $1 to buy $1 of a stock, regardless of the price on Robinhood with like fractional shares, and lots of companies have fractional shares. So what we like to look at, like, is a stock expensive? Mm-hmm. We look at the PE ratio. The PE ratio is the price to earnings ratio. Basically, how does the stock of the price compare to the earnings per share of that company? So for a company like Zoom, it has had unbelievable user growth in the past 3 months. And so its PE ratio is crazy high. I don't know it off the top of my head. It's probably
like the same as like an Amazon or a Netflix or whatever. It's like, it's extremely overpriced.
Right. It's a company whose stock price is very high relative to the amount of profits that the company's making. Mm-hmm. So if you're thinking I might want to invest in Zoom, you should check the stock price, see if you see like incredible growth recently. Because if the stock price has grown so much, maybe like your idea is already a well-known fact, and maybe you're kind of too late-ish, and who knows if it's still going to grow like it has been. And then if you're still not sure, like based on the stock price from the past, check the PE ratio. The average PE ratio for all stocks in the United States is somewhere around like 15, 16, or 17. So if the PE ratio is higher than that, it's a relatively expensive stock. If the PE ratio is lower than that, it's a relatively cheap stock.
And that's literally what Warren Buffett does all day.
Warren Buffett loves the value.
He loves value investing.
He's like a
I love
TV
Warren Buffett.
Maxinista. He's buying stuff.
He really is. You know that Warren Buffett like doesn't even like to get his hair cut because it costs like $8. He lives really simply because he's like, I could invest that $8. And you
guys, just
$8.
this week he got an iPhone for the first time.
Sounds like my dad.
So he could text me. You're laughing, but it's true.
I see Christelle actually asked a question here about like whether some of these companies that are benefiting in the corona economy, as we call it, or like during this coronavirus, if that's just going to drop right after. And this is
you guys talked
great
about that. Yeah. I think that's so interesting too. Is it just a trend or is it sustainable? Yeah, I mean, I can talk a little bit about that, which is I think like there's some things that will obviously maintain themselves, but there's some that will go back to normal. Very broad.
Yeah.
I'm not supposed to give advice.
This goes back to the like have a hypothesis and have conviction. If you feel conviction for your hypothesis, go for it. For instance, hoarding at grocery stores. Like toilet paper is getting hoarded, but our bodies aren't changing. We don't need more toilet paper. It's just like people are freaking out. So maybe toilet paper hoarding is not sustainable. And like that's not going to be a long-term boost in sales for toilet paper. But Lysol, which is owned by a company called Reckitt Benckiser, I think. It's like a British company. Maybe people will like longer term be germaphobes and
I think
want to
so,
spray
for
their hands all the time. So I think it depends on the company, whether this is like a one-off hoarding moment or if it's a long-term change in the fundamentals. Like I think airlines is a really good question. Like when the disease is destroyed by a vaccine, maybe some businesses like will say, you don't need to travel to New York for that meeting. Like just do Zoom. Like we're all cool with Zoom now. It could have long lasting impacts.
Oh, and then we were also talking yesterday about like workwear, like that casual workwear might be like a whole new thing. I feel like that's been so clear with people that they just want comfortable clothes to wear at home. And it's like a new genre of clothing to sort of invest in because it's not pajamas, it's not work clothes, it's not going out clothes. So it's like this whole new niche. And so, I mean, that would be an interesting place to look at as this continues. But you know, I feel like you two are so lucky because you have an alliance, like you are besties and you're like comfortable talking to each other about your portfolios. But like, what is sort of the right way to talk to your friends about what you're investing in? Should you be nervous that they're going to like steal your ideas? Like, you know, like what are your rules?
For Nick, you're definitely like my best stock chatting buddy. I've got others though. Like I literally talked on the phone with my father-in-law this morning about something, which I can't discuss because we don't make stock recommendations, but it's kind of a sounding board. It's like, I have this idea. It might sound kind of crazy. Let me talk you through it. Is this a good idea or is there no chance that that becomes true?
Okay. So, let's look into the questions. Do you guys want to pick one? I can pick one. So looking back on your failures, like, I guess, do you guys want to talk about the stocks, like the investment choices that you've made that were really bad?
Yeah.
Like, can we hear about your worst investment that you ever made?
Sure.
I guess we did sort of talk about it, but we didn't hear Nick's.
Yeah. One? Yeah. That was not my worst investment.
Okay, tell us your worst. Come on.
Yeah, my worst was definitely Spirit Airlines. Horrible investment that I was embarrassed to own the stock of. But Spirit Airlines is the airline that like you pay $49 for your one-way flight and you're like, what an incredible deal. But then they charge you to carry on a backpack. They charge you to like buy a soda, they charge you for the bathroom.
Breathe.
We don't really charge you for the bathroom. But my hypothesis, like back in 2015, was that like economic inequality was continuing in America, and people would want to save money on flights, and the luxurious Catch Me If You Can, Leonardo DiCaprio, like glorification of flights was completely over, and people just wanted to save money. Now, big mistake I made there. I bought the stock. I looked at the stock price and I thought, wow, it has tripled in the past 3 years. It's going to triple again. That was my fatal flaw. I was young. I was stupid. I invested like $800. That dropped to $500. And it was a devastating $300 loss for me. But let's be honest, I survived a $300 loss.
Yeah.
And that actually is one of my like best tips I like to tell people. Start small, even if it's $70 or $30.
The first investment that I made, that like the first money that I put into stock market my own was $600. Because I was like really risk averse. Like I was like, okay, I'm scared. And you know, it spiraled from there, but you have to just start somewhere. And like you said, like feel comfortable losing that money. It's not going to feel good if you end up losing it.
Like if you got a long-term horizon, like one of my biggest mistakes essentially was Jack and I had both bought Beyond Meat stock, and we saw it jump after the IPO and got higher and higher. And we remember talking to him like, this is insane. I can't believe this thing's up 400%. Well, that was an indicator when we were saying, this is insane. I can't believe blank. So when we look back on that story, we're often like, you know what, were we making that purchase for the long term? We were, so we didn't end up selling the stock. Do you potentially miss out on opportunity because we weren't, you know, maybe thinking harder about what it had been doing in that interim performance? Yeah, I look back on that, I'm like, now maybe we couldn't have taken advantage of that. But again, if we went back to kind of our founding principles, we were purchasing it for our long-term belief.
Yeah.
So that's why we didn't end up selling it.
Amazing.
In college, I had a mock portfolio, and that was like a finance class I took, and I set a bunch of stocks. But to be honest, I never looked at it and I didn't learn a thing. But once you put even $1 into like real investments, suddenly you're focused, and you know you're gonna check the stock every day, even though you're not supposed to. And if you gain, you're gonna be excited, and if you lose money, you're gonna be devastated, even if it's just like 30 cents on your $1 investment. But here's the thing: every time you win and you gain with your investment, and every time you lose, you're gonna remember something about it and take a lesson from that, and then you'll get better and better prepared for when you really do have real money, like big money. Once you're an adult and you have some savings and you're and you have extra money to invest. And so like it's great to invest with just a little bit of money. It's never too early, because you will learn lessons just like if you had invested a lot of money, and then you're going to be more successful in the long run.
Okay, so if you want to know about like Tesla, about these specifics, you got to check out Robinhood Snacks. And if you are, you know, looking for your way in, your first steps, come to Mrs. Dow Jones. I've got you. I will shepherd you through these doors, and you will be a Wall Street insider in no time, and we'll have fun doing it. Thank you guys so much for joining me. I'm sorry that this ran a little bit late. Thank you to all of our lovely participants for being here. I'm so excited, and thank you guys.